What historical event just took place in the stock market? Today we're going to talk about what happened, why it happened, and why it's important to you as a long-term investor. Okay, so if you've been watching my videos, you might have seen a video come out about a month ago that was talking about extreme valuations when it comes to smaller, less expensive companies trading very cheaply and large, more expensive companies being very expensive, in particular relative to each other. So in other words, large companies like in the S&P 500, very expensive. Smaller companies, very cheap. And the point of the video was, how long can expensive companies stay expensive and cheap companies stay cheap? Well, as it turns out, not that long. In July, now this video is in August, but in July of 2024, we had a period where the smaller, inexpensive companies outperformed the larger companies, the S&P 500, by a historical gap. And so let me give you this very complicated chart, but don't worry, I'm going to simplify it for you. All these blue squiggly lines do is measure the difference between how is the S&P 500 doing relative to the Russell 2000. And so you may or may not know the S&P 500 tracks the returns of the largest 500 companies in the United States. The Russell 2000 is going to track the performance of 2,000 small companies inside the United States. And so we've got large, expensive, and smaller, less expensive companies. Well, we had a 12-day period where the Russell 2000, the smaller companies, outperformed the S&P 500 by over 12%. That's that blue line all the way over to the right where you see that line spike pretty high, higher than all the other lines, outperformed by 12.65%. So let me say that again, because all that matters in this whole chart is all the way to the right, all the way to the top. There was a historical, as in never happened in history, outperformance of smaller companies doing better than the S&P 500 by over 12% in only 12 days. And so most of the time when you're thinking about a 12% performance, that's an annual number. That's like a good year in the stock market. This happened where small companies did better than S&P 500 in just 12 days. Now, okay, why did it happen? Why all of a sudden? Now, it's obviously not because of my video that came out a month ago. We were pretty lucky in the timing of that video. We don't know when these things are going to happen. We just know that they usually do. The expensive stuff gets less expensive. The cheaper stuff usually ends up going up in value. But we don't know how long that's going to take. As it turns out, it didn't take that long. But why did it happen? What was the catalyst? Did something happen in the news? Or was it earnings? As it turns out, nothing happened. The market just changed its mind. People decided that smaller companies were worth more and larger companies were worth less. Now, why that's important to long-term investors is that when you are trying to predict what's going to happen in the marketplace, or you might be saying, well, I'm going to wait until the dust clears, or I want to wait for some kind of sign or some kind of news, many times there is not any. And these large moves in the market can happen with no news at all, and the market just changes its mind. And so, when you're looking at your portfolio and you're looking at, okay, what do I own that's expensive? What do I own that's less expensive? If you own those less expensive items, July was probably a great month in your portfolio and you might be surprised. But more than anything, it is important that we've always talked about is when you're looking at all of your assets, make sure you're being compensated for the risk you're taking and know what you own and know why you own it. Hope you found this helpful. And as always, thanks for investing your time with the Personal CFO.